Okay. The first part we'll discuss is more on the risk. Okay. While we are discussing investment planning, it has to be in connection and correlation with the risk profile of the investor. Okay. So everyone knows about risk profiling, that it's important. Okay. So everyone knows about risk tolerance, risk capacity. Risk tolerance means the psychological or the emotional willingness to take risk. Risk capacity is basis your financial capability, how much risk you can take. Okay. So what we are learning right now in risk profiling is there in textbook knowledge. Okay. Does risk profile align with your long-term goals? How age defines attitude to risk? ये सब हमने किताबों में पढ़ा है. How to balance risk for investment planning, investment success and all. Okay. But what happens in the real world is different. And this is where CFP, your certification, comes most handy. Okay. So what actually happens in the real world is when you are taking the client actual risk capacity, okay, it's very hard to gauge. Okay. You will be giving him a questionnaire just to try to gauge his risk capacity. Okay. He will answer some questions. Okay. And basis that you will see, okay, yeah, ये है Rishi या Krishan का risk profiling, but it's different. So why CFP soft skill training comes important over here is here we build the critical thinking of a CFP aspirant. Okay. He starts understanding the human emotional capital of the client, most important. Okay. And ये risk profiling questionnaire में अगर कोई investor लिखता है, it is not you abide with that. So you need to ask them more questions. Okay. Second most important है कि now advisor bases the market condition, they forget the risk profile. And this is what has happened in the last 3 years. Okay. Every advisor was mentioning small cap le lo, mid cap le lo. Now in last 4 or 5 months, everyone knows what has happened in the financial markets. Okay. So that's why CFP soft skill training comes most important, where we balance the harmony between risk tolerance and risk capacity. Okay. CFP में हम एक important part में जाते हैं and we focus on investment planning and asset allocation. Okay. And lot of questions that comes right now, which is questioning the entire personal finance. Okay. Everyone is talking about asset allocation now. 3 साल पहले कोई नहीं पूछता था कि एसेट एलोकेशन कितनी होनी चाहिए. सबने 50 to, if I talk to every young professionals. So just to give you an idea, in the last 1 year, I have given financial advice to more than 600, 700 young professionals, mid-age professionals, mainly 30 to 50. Okay. When the glory days was there, everyone was sticking on to a aggressive portfolio. Okay. And now things have changed. Asset allocation is the most important. And this is in CFP, we emphasize too much on investment planning and asset allocation as a chapter. Third, last, I think the fourth point is psychological influences affect in a big way. Okay. A lot of clients have confidence bias. Okay. Loss aversion bias, hot hand fallacy. These are terms that you learn in CFP. Okay. This will help you in understanding the emotional, the psychographic of the client in a very simple manner. Okay. And we have a special module, which is the level 4, which is entirely on the soft skill part. Okay. Which is most critical for a CFP. And I think the last thing where we went wrong, most of the advisors, we were not able to understand the client finance behaviors. Okay. Those guys who were lacking the CFP certification were not able to understand the client finance behaviors. This is what actually happened in the last 3 years. And in the next few years, you will see these issues coming up where the asset allocation, investment planning not done by the advisors correctly. And I have seen guys who have RIA certification, a CFP certification, are able to handle the client more efficiently and accurately. Okay, so this is asset allocation, risk appetite, return expectation. So everyone knows 20 से 30 साल वाला एक नौजवान होएगा, उसके return expectations is high, risk appetite is high, liquidity is low. Okay. I just want to say this is all global gyan. Okay. When you meet a 20 to 30 years old individual, okay, every individual has a different risk appetite, different risk return expectation, different liquidity profiling. Okay. So don't go with the stable that एक 50 से 60 वाला एक रिटायर्ड प्रोफेशनल होने वाला है, जो रिटायरी होने वाला है, उसकी रिस्क एपेटाइट इज मॉडरेटली लो. ओके, we have seen it in the last 3 years where they have also gone with small cap and mid cap. Okay. And now I have to tell them, sir, now move from small and mid cap to now large cap and balanced and hybrid funds. So don't follow a table of asset allocation, risk appetite, conforming to the return expectations. Okay. Ye sab, I would say in Hindi, the word is gyan. Okay. What CFP teaches is the critical thinking, the listening skills. But I would say more on the discovery process of the client, which is most important. Okay. You will have, India has about 2.5 lakh mutual fund distributors, and it has only CFPs in India are only 3,000. Okay. And the quality of imparting financial advice, which is from by a CFP and a distributor, is a major difference if you see on the qualitative front. Okay. Okay. So investment planning, important chapter that we have in CFP, tells you how to correlate with life goals. Okay. So in the chapters that we teach, we correlate investment planning, retirement planning, insurance planning. Okay. A multi-dimensional view is presented. Okay. And most of the questions that we present, okay, and the answers that you have to give is a multi-dimensional. Okay, see, these are some of the rules of personal finance. I will not go through in detail, but I think everyone should be aware if you want to be a great investment planner. Rule of 72 is simple. Everyone knows it. How many years it takes for money to double? Okay. Simple formula, 72 divided by the rate of interest gives you the number of years, how much it takes for the money to double. Okay. And here, I think this is the most important rule of 72, which you should tell the client. Okay. What is the difference by investing in FD versus investing in a mutual fund? These are basic other rules. 6x. Every financial advisor, the first rule, I would say the first mantra before beginning the personal finance journey for a client, he would always emphasize, sir, आपको emergency funds होने चाहिए, at least 6 months of your monthly expenses. Okay. Now, India में क्या हो रहा है? Monthly expenses तो X है, but you will see a different component coming here, which is lifestyle expenses. Okay. Vacation, money which is spent in Swiggy, Zomato. Okay. So that is actually increasing. Okay. And lifestyle inflation is actually hurting the household income right now. Okay, next is 40% EMI. Total EMI should not exceed 40% of the income. You should increase your SIP 10% every year. A retirement rule 25x. Everyone thinks 25x of my annual expenses अगर मिल जाए तो retirement planning हो जाएगी. I can retire. Okay. So guys, this is a false propaganda. Okay, 25x retirement tool is more or less was conforming to US, not for India with the kind of inflation that we have. Okay. If any youngsters who is in the age of 30 asks me, मेरे को कितना चाहिए 25 annual expenses, how much should be? I normally say, please at least aim for 50x. Okay. Don't go for 25x. You will see a lot of literature coming here saying 25x. 25x does not conform to the Indian inflation. Okay, 100 age rule. This is also one of the principles that determining the equity and debt mix. Simple है, subtract करो अपना age 100 से, जो मिलेगा वो उतना, the number will be invested in equity. So if you are 30, that means 70% is in equity, rest is in debt. Okay, these are some knowledge, but not hardbound. So don't go with that kind of asset allocation to the customer, to the client, saying, sir, आपकी एज इतनी है तो आप इतना इन्वेस्ट करिए इक्विटी में. 50, 30, 20, this is, I think, important, which I tell to my client, that at least have 20% for investment, okay? But right now, with the kind of inflation we are seeing, return expectations we are seeing, I am normally advising my clients to have at least 30 to 35% in investment, in savings. You should have 20x of term insurance basis your annual income, or it could be basis the expenses also, which is a different formula. I always tell my clients to invest 20% of the savings in the first week itself. While they're doing their SIP, yes, they can put on the 1st, 5th, 10th, 15th, 20th, 25th. There they can do the split. So objectives of investment planning, everyone knows, so I'm not going into detail on this. So investment planning, the main approach is safety, income, capital growth, tax minimization, and liquidity. Okay, so this is asset allocation. Okay. Now, basis the risk profiling of the client, we categorize them as conservative, moderate, passive moderate, and aggressive. This is a chart I've taken from DSP mutual fund. Okay. And a lot of students ask me, sir, which report should I see? And I would say DSP literature, if you go to the website, DSP mutual fund, they provide the best knowledge. Okay. As students of CFP, if you become a potential CFP student, or if you want to become a potential financial planner, I think DSP mutual fund literature is most important. There are HDFC, Kotak, Edelweiss, Nippon. Their mutual fund insights are also good. Okay, but refer to DSP. I personally like it because they present a overall holistic view of the economy as well as every asset class. So here what they have said, conservative को 30% होना चाहिए equity allocation में, aggressive को 70%. Okay, this is what they have said, but it would keep on changing while you talk to the customer or the client. Which asset class to select? This is actually done when you correlate the risk profiling versus the asset allocation. Okay, so normally I have a lot of clients who will say real estate has given more returns. Okay, while if I will show Funds India research report, आप यहाँ देख सकते हो कि equities in the last 20 years have given a return of 12.9 versus property, which is given around 6%. While it is a very debatable topic, in the last 3-4 years, real estate have actually gone up. Okay, we'll discuss that when I'm showing some other slides as well. So the ideal asset mix is it how much should be in equity, how much should be in debt, and how much should be in gold. Equity 40 to 60%, debt 20 to 30%, and gold 10 to 15%. Okay. I've seen a lot of young professionals who are actually saying, no, मेरे को debt में डालना नहीं है, मेरी risk appetite aggressive है, मेरे को पूरा small cap और mid cap में डालना है. Okay. एक interesting chart मैं अभी दिखाऊंगा next slides में, which will actually kill this entire thing of debt में नहीं डालना चाहिए. I always tell my client that do not have more than 60 or max 70, but I would say 50 to 60 should be your ideal mix in equity. Gold and silver has to be in your portfolio. You must have seen in the last 2-3 years, gold has given fabulous returns, more than I would say in equity last year as well. And this year also, YTD, if you see gold returns, is more than real equity returns. Why mutual funds? Everyone know I'm not getting into detail, but what kind of mutual funds that you need to invest as investment planning, potential investment plans, that's what I'm going to tell. So these are some wealth building strategy which I deploy for my clients, which I'm telling you also. Okay. Equity mutual fund, I follow a simple principle. Large cap hai to index funds या passive funds. Okay. Historically, we have seen that in large cap mutual fund, passive and index have outperformed active fund. Okay. So everyone knows about active and passive. So I'm not getting more into it. Active fund is where the fund manager takes active involvement in placing and executing the orders and buying the stocks. Passive fund is normally replicates the index. Okay. I normally tell my clients to have a suitable mix of large cap, mid cap, small cap, and sectoral funds. Sectoral funds abhi nahi, because that was the theme about 2 or 3 years back. Right now, sectoral funds and international funds, because of the LRS, has been taken out. But a good mix between large cap, flexi cap, multi cap hona chahiye. Mutual fund selection should not be basis star rating of CRISIL or value research. देखना चाहिए, but आपको rolling returns देखना चाहिए, which is there in a lot of other platforms. You open ET Money, you open Value Research, you open Advisor Coach, you will see all the rolling returns coming in there. Okay. Also have a look at expense ratio, past performance, AUM manager, fund manager experience to arrive at the final list. Okay, so this is why I go for index funds for large caps and prefer flexi cap at this current level. Okay, so I'm normally telling my clients to stick to large cap and flexi cap, and mid cap and small cap should be only 10 to 20%. So this is the S&P report, which clearly says that active funds have underperformed passive funds in the last, if you take 5 year, 3 year, or 1 year basis returns. Okay. While in mid cap and small cap in other categories, we have seen active funds doing much better. So it's a very debatable topic. हमें active लेना चाहिए या passive लेना चाहिए? So I would say large cap, go for passive. If it's small cap or flexi cap, go for active only. Small and mid cap, go for active. I normally prefer large caps because passive large caps, because expense ratio is low. Okay, now for all potential investment planners who are there in this discussion, it's most important that everyone should know about technical analysis, a bit of technical analysis. They should know how to read charts. Okay. In last 3-4 months, ये मैंने weekly charts बनाए हैं of Nifty 50. So I'm not getting into the details of this trading view chart, but you should understand more on technical analysis. The information is so much available in YouTube that you don't have to take a course for it. Okay. So just follow YouTube, the lot of gyan and knowledge is available in Nizaroda Veracity. You can follow that. It's important to know fundamental analysis. So one of the students was asking me, where can I take information on fundamentals on the profit, or what is the market cap, what is the profit, what is the sales, what is ROE, what is ROCE. Okay, so screener.in, this is where you can build more of your fundamental analysis. Here, do sectoral study to determine which companies to invest. Okay, I would say, I will tell all my investment planners, all my students, don't get into equity while you're starting your career. Okay, focus more on mutual funds. Okay, focus more on mutual funds and ETF, and then move to equity. Don't at the start come to go to equity. Okay. So this is an interesting chart where I'm telling you on small and mid cap. Okay. So this chart says that after 3 years of rally in small cap and mid cap, small cap will correct meaningful in the 3rd year, and the 5th year to 6th year, there the returns will be flattish. Lot of advisors miss this entire thing. Small or mid cap में जो rally आई थी, lot of advisors should have told their clients to book some of the profits. They did not do that. And right now you can see what is happening. Small and mid cap they've fallen by 25%, 30%. Okay. So it's not like that. As investment planner experts and all, you need to understand the economy. A good financial planner is one who understands the investment cycles. Okay. If you do not understand the investment cycle, if you have a herd mentality like other advisors, या small cap बढ़ रहा है तो सबको small cap बताएं, then you will not be able to stick with your clients. Then your clients will keep on leaving you. Right now, one of the students asked me, कितना small or mid cap होना चाहिए? I would say to conservative client, I would say don't stick with small and mid cap. Those who are moderate and bit aggressive, I would say not more than 20% in small and mid cap as of now. Gold and silver, should we buy? Okay, there's this famous ratio, gold and silver ratio 80-50, which is price of gold versus price of silver. Okay, so when the ratio is above 80, which is right now, you should go for silver. When it below 50, you should go for gold. Okay, so this is just a guideline. It is not necessarily that you follow it. Okay, a lot of people ask me where to buy gold and silver. Normally I would say that buy gold and silver through ETFs like gold bees or silver bees, which is there. You can buy it from your demat account. Gold has given a good rally. Okay, we understand it's a hedge against inflation. It's a safe haven asset and all. Long term track record of gold and silver is not so great. While silver is very, very volatile, gold also has a long period of zero returns, like from 1979 to 2003, from 2012 to 2018, returns were flattish. Okay. So for long-term investing, gold must be, tell your clients, gold and silver commodity should be around 10 to 15% of overall asset allocation. You need to prioritize your clients for long-term wealth creation, stick to equity exposure. Avoid chasing past performance. If gold has given a return of more than 20-25% in the last 2-3 years, it's not necessary that kind of performance will carry forward for the next 2-3 years. Okay. A lot of clients that tell me, should I buy gold in bulk? I normally say not the right time to bulk buying in gold and silver. You can do a SIP, randomly buy 5K or 10K of gold and silver through ETF only. Okay, equity investing, as I've told you, you should first start with mutual funds, then move to exchange traded funds. Okay. ETFs is a wonderful style of investing, more of passive style of investing, just like mutual fund. The great thing is you can buy it real time and sell it anytime. Okay. Obviously in the market hours. This is the list of ETFs that I personally like it and tell it to my client basis the market investment cycle, what to buy it. For conservative investors, I normally tell them stick to Nifty Bs, Bank Bs. Why Bank Bs right now? Banks, private banks are at a very reasonable value right now. The fundamentals, the financial positions of banks are changing. NPAs are going down, return on assets, return on equity is going up, price to book value is going up. So stick to private banks. A sector to watch and buy right now is private banks. But don't expect a very high movement happening in banks. Okay. But a meaningful gain upside you will see in banks. Uh, I would also tell my students always follow factor indexing, factor ETFs like value, quality, low volatility, most important during this investment cycle. I'm not getting into too much detail, but you should understand after this call, go and Google more on factor ETFs. Right now, when market is correcting, which I think one thing is most important is value investing. Okay. Okay, debt portfolio balancing. Okay, so right now, you have seen if a client whose asset allocation should be around 50 to 60% of equity, there because of the market movement, it has gone to 70%. So I will not tell my clients to sell equity. I would say, okay, if you have some equity, sell the high risk one like small and mid cap, but increase your debt portfolio. Okay. I've seen a lot of advisors do not want to tell about Sukanya Samriddhi scheme, increasing the VPF, EPF amount to corporate employees. I don't know why, but if it's a girl child, I always tell, be it a risk profile, conservative or moderate, open a Sukanya account. Okay. And if you are scared about equity portfolio, increase your VPF amount, the employee provident fund, which is 12%, you can take it to around 20%. In some cases, it can be taken to around 100% of your basic plus DA. At this time, when market is very volatile, I'm telling my clients to go for a high yield corporate bonds. There are a lot of third-party bond platform like Wind Wealth, Grip Invest, and Golden Pie, which are giving interest of around 11.75%. And the great thing is the time tenure is around 18 months, 14 months. You don't have to bind yourself for 1 year, 5 years or 3 years. And the returns are 11.75%. And these are senior secured bonds. That does not mean you put all the eggs in one basket. Go for bonds which have a suitable credit rating like A minus, A plus. I'd not suggest to go for BBB kind of credit rating. I'm right now this time, if your client has surplus funds, tell them to put money into debt, mutual funds, medium term, medium term and short term debt funds. Reason because RBI is reducing the interest rate, because of which the bond prices will go up and NAV of debt funds increase. Okay. And this is a mix of ideal asset allocation strategy. I would tell right now that when I started my journey as a financial planner, the one thing what created me apart from other distributors was my CFP certification. Okay. I'll tell you a good story over here. While I was traveling from Delhi to Bombay, so I have told Rishi about this. I was sitting in the aisle seat. There was a retired person who was sitting in the middle, and one of the director from a PSU oil company was sitting in the window seat. So the retired person was very inquisitive. So he asked me to the director, "What do you do?" So he said, "I'm a director in this particular PSU company." Then he asked me, "What are you?" I said, "I am a CFP and a RIA." And for the entire 1.5 hour duration, he just was talking to me on the market scenarios, on the economy, where should we invest, how much should be my asset allocation, how much should be my retirement corpus, how much should I do my SWP and all. Okay. So do understand that CFP is a gold standard in personal finance certification. It adds value to yourself. Okay. It has a lot of esteem value. Okay. It has a lot of value. And also you will see when you put that CFP certification in LinkedIn, while you will see a client calls increasing, you will also see the kind of discussion with your clients, the kind of discussion that you were having maybe 6 months before, and that what you're having right now, there is a hell difference between that. Okay. And as I've said, I graduated from ICFP. My mentors and my teachers were Rishi and Madhu Sinha and Dinesh Gupta, who is a faculty, which I'll tell you later on the call. So CFP is important if you want to pursue a career in personal finance. Okay. And I would tell you one more story. A good friend of mine, he's right now one of the telecom CEO of one of the companies who are here in Delhi circle. And he was moving from one company to other company. And then he asked me, "Robin, right now I'm in this 90-day gestation period. What should I do?" I said, "CFP try kariye." He enrolled to the CFP and ICFP program in November, and he cleared that paper in February 2025. So in a matter of 3 months, he was able to clear. Now he's appearing for the case study. So there are some students, dedicated ones, who are able to complete it in 4 or 5 months. Okay, like this one is completed in 3.5 months. Okay, so that's why I'm saying a lot of people, I have seen a lot of household makers, homemakers pursuing CFP, completing that certification, adding value to their overall qualification. Yeah. So now coming to this topic, this is ideal asset allocation strategy, which I follow. I'm not getting into detail about this. You can go through it, where I normally tell my clients at this market level, Diversify your portfolio in different asset classes. Okay. If equity exposure is high, reduce it a bit. Long-term investing is essential to portfolio building. Every asset class has its own risk and volatility. Invest in assets that beat inflation and do thorough market research before investing. Okay, so now we come to the next chapter where we'll explain more about CFP, the entire process, why it is important for pursuing, if you are pursuing a career in personal finance, why it's very important. Okay. I hope Krishan, Kanaya, I hope you're in the call. So Kishan and Kanaya are there in the call. Kishan is the program lead for CFP and ICFP. And while the numbers will be flashed at the end, you can discuss with him in detail about the entire CFP. Okay, now I'll just detail you through on the CFP part. Okay. CFP certification, why is important? I've stressed that point again and again. You will see a lot of certification in the personal finance field. I'm not naming them, but CFP is way ahead. Okay. It is the topmost certification in personal finance, recognized in 27 countries. I have a friend who was in India, a CFP. He got a PR in Canada. He pursued CFP over there. He just had to give one exam in Canada and started the CFP entire career in Canada. And I've heard now he's doing phenomenally well. He has joined an asset management company, a wealth management company over here and doing well. So that's why the point is it is recognized in 27 territories, countries. That is most important. And last week only, I think this week only, the CEO of FPSB India, Dante Digori, was in India. And I had that pleasure of meeting him and the FPSB India, CFP India CEO in PhD CII office in New Delhi. It was a great meeting where we focused that if you need Viksit Bharat, if Prime Minister Modi vision of Viksit Bharat, financial education has to be imparted in such a manner that it should be in the curriculum of every school from class 7th or 8th, why personal finance matters. And there are right now NCRT is releasing comics basis personal finance in the market. That's some of them have been rolled out. So coming to CFP certification, it's a gold standard certification. Most important, as I've said, there are a lot of other certification, but CFP is, I think, major differentiating factors between this certification and other certifications. Okay. And right now in the world, there are around 3 lakh CFPs. And the potential in India is so much. We have just 3,000 CFPs in India. Okay. And the rate at which people are focusing on CFP as a career, because personal finance market is going to balloon and blast. Okay. Um, the equity exposure in India is quite low. And if we go to that Viksit Bharat level and the kind of personal finance experts that we require maybe in the next 3 or 4 times, in the next 4 or 5 years are multifold. That's why the recruitment by an asset management company, by a wealth management company for CFPs is increasing. Okay. And it will keep on increasing. A lot of people ask me, would AI and robo advisory deteriorate the value of a CFP? Okay. It will not. Okay. The reason being, whenever the client emotional behavior comes, he always prefer to have a face-to-face contact with a personal finance expert, which is a CFP. Robo advisory will not be able to replace personal finance experts. Okay. But if you are imparting knowledge based on past trends, not looking at future economy, what will happen, not looking at investment cycle, not going through the depth of emotional capital of the client, understanding the client, the risk profile, asset allocation, investment planning, okay, not understanding the retirement planning, how the client wants to go about the insurance planning needs, then it's gonna be tough. And this is where CFP comes into impact, where um, I don't see robo advisory or AI ever replacing CFPs, because any client who has a 1 crore corpus would not like to put that money into the hands of AI, would not like to put the money into hands of a robo advisory. He would prefer to sit next face to face with a CFP expert who can guide him, handhold him with his 1 crore corpus. Okay. And this is where the unique 4-in-1 certification program comes. Okay. The 4 international certificates from FPSB, which I'm going to tell you later on, which is ideal for students, professional, IFAs, bankers, insurance agents, relationship managers, just to mention a few. I've seen that CFP is being taken by personals who are outside this field. Okay. I've seen people coming from oil and gas going for CFP knowledge. People who are into different field altogether from FMCG going for a CFP certification just to enhance their knowledge. Third point, personal finance and wealth focused curriculum, which is based on the global markets, which is based on the Indian market curriculum. You will have the global market curriculum as well as the global curriculum as well as the Indian market curriculum, which will tell you both aspects. And it's a short-term and online study system. While it says over here takes 6 to 12 months, I think we should replace it to 4 to 12 months. I've seen most of the professional right now crossing and passing it in the next in really maybe in 4 or 5 months, including the case study. Okay. And the study to exam is completely online. Okay. Program eligibility. Okay. To join the program, minimum 10+2 is required, 18 years of age, no restriction of stream. But to get the CFP certification, you should be a minimum graduate, 3 years of work ex in BFSI, or 1 year of supervised articleship training under a CFP. I have intern with me from one of the colleges in South Campus, Delhi, who is interning with me right now. He's in his second year of BCom, and he is actually pursuing CFA. He has completed his CFP final exam, also given the case study, but the CFP mark, the registration, the certification will only be given to him after he completes the 1 year of supervised articleship. Okay. So anyone, any undergraduate pursuing, don't be in a doldrum saying, how would I get that certification? With whom will I do the supervised articleship? We have a lot of mentors, we have a lot of alumni with whom you can partner and complete it. Okay, so this is the fourth level of certification which I was telling you about. Level 1 is investment planning specialist, most important pertaining to the current economic and the market scenario, where we detail about personal finance management, investment planning, asset management, regulatory, environment, legal compliances, and all. I think for me, this is the most important part, investment planning, because over here, before a CFP, I never used calculator. Okay. After becoming a CFP, I have a financial calculator, a Casio calculator, which I play around with. I won't say the word play around, which I do it for my workings. If a client says me, can you tell me how much investment I require for children education in 10 years? I do not have to open my Excel. I just have that Casio calculator basis of which I do the calculations. Okay. So for me, investment planning specialist exam is quite important. It has helped me a lot. Retirement and tax planning specialist. Okay, normally in India, there's a problem. Every middle-aged Indian ignores the retirement planning. Okay. And they plan their retirement planning corpus when they reach the level of 45 and 50. Okay. So this is a specialist exam which actually tells us why retirement planning is more important. Okay. So somebody asked me, is retirement planning more important or children's education? So I gave my answer to him. Children education is important, but not at the expense of retirement planning corpus. Okay. Lot of professionals, a lot of corporate employees are sacrificing their retirement planning corpus, which I'm not in favor of. So this level 2 exam gets you into that. Tax planning special exam tells you each and nitty gritty about the Indian tax plan, new tax regime, old tax regime. Okay, see, before CFP, I used to take the help of a tax expert. Okay, now I do my tax filing with the knowledge that I've gained through the tax planning specialist. For the last 5 years, I'm doing it myself. Okay, so that's the little nitty gritty things which actually helps you in your personal life, while you can do it for yourself, for your wife, for your family members as well. Level 3 risk and estate planning specialist. Risk I've told you about. I'm not getting into detail. Estate planning, type of wills. Okay. I never thought estate planning is, I always thought estate planning is one of those, I would say, yeah, one more chapter. But CFP taught me estate planning. Why is it so important? Okay. I've seen professionals who are in their late 30s and 40s making will. Okay, where estate planning comes into more emphasis. So estate planning is an important chapter which Rishi takes, and this is, I think, some new things which we learn in estate planning. And then last is CFP final level certified financial planner. So this is an exam, a 3-hour exam, which embodies the entire investment planning, retirement planning, tax, risk, estate planning, everything. And it's a 3-hour exam. So you will get a case study of Mr. X and Mrs. Y. The entire case study will be there, giving their entire investment plan details, asset, taxation, how much assets they have, what is their net worth, and there will be question basis how much their retirement exposure corpus they require. There'll be multi-dimensional questions pertaining to their human life insurance needs, how much term insurance they require. So important chapter, CFP final level certified planner. There is a theory exam, which actually builds your soft skill level. Okay. While these will basically give you the foundation level, the level 4 theory gives a more of the soft skill approach, which I'm going to tell you right now. So this is the soft skill approach, which none of the other certification will detail you. Okay. So it is based on 30 years of research done by Financial Planning Standards Board, okay, which is based in US, which is a benchmark for excellence. They teach the nitty-gritty of personal finance. They set the standards of personal finance. This is the only body which has actually done a whole lot of research and developed their own methodology on how to go about giving personal finance financial planning practice. It tells a CFP and an RIA what are the rules of conduct. Uh, CFP has to abide. They have to follow some ethical and professional behaviors of being a certified financial planner. That's more important. Okay. And that is the more, I think, I would say the major demarcation between a CFP and a other advisor. A client will always go to a CFP because he knows that he is certified. He will abide by the CFP code of ethics, okay, which we have to sign it before we get the CFP mark. So there's a professional responsibility where we have to uphold the ethics and integrity. Okay. So our signatures are given. We have to abide by that. Only then we get the CFP final certification. So this is most important. Financial DNA, the discovery process. I've told you about that when I was discussing the risk part. it it develops the listening skills. Okay, as a CFP, you need to have very active listening skills. I would say empathetic listening skills to understand, not to just respond. Okay. I think it's a 360-degree holistic view of your listening skills where you listen to the customer. Okay. You constantly are in touch with the customer. Things will change. Things constantly change basis the investment market. So that's why you have to listen to the customer and client always. Appreciative inquiry. Okay. CFP builds that knowledge, that skill in you, where you are able to understand the strengths and the weaknesses of the client profile, his entire asset, net worth, what is he committing wrong, where he can do some changes to build more positive net worth. Critical thinking, I've told you that it helps the CFP to make good decisions, better decisions. Okay. Career opportunities for CFP, as I've said, tax planning. Okay. CFP professionals are onboarded by tax planning companies, estate planning companies, fund houses, fund management companies, financial advisory companies, services. A lot of RIAs hire CFPs. A lot of fund management companies hire CFPs. General insurance company, life insurance company, wealth management companies, private banking, relationship managers. A lot of now HDFC and ICICI, they focus more on hiring CFPs rather than going for a guy who is MBA in finance. Investment consulting companies, portfolio management companies, insurance products. So as I've said, CFP is important. I re-emphasize the same part again. A lot of students come to me, they are scared saying, will AI and robo advisory take our jobs? My answer to it, they will not be able to take the jobs because over here, there is an emotional connect between the client and the advisor. And that is most important. Okay, so these are different kind of industries where we will see CFPs being hired. And as I've said, Indian market equity exposure is quite low compared to even China, even some Southeast Asian markets or Europe or US. We can't compare it to US. So if I compare that ratio of clients to advisors of US, if I compare it, maybe right now, our ratio is quite low. But with the kind of digital revolution which has happened, with the kind of demat accounts that everyone has, I think it's a matter of time that CFP professionals, this will skyrocket. Okay, why ICFP? While there are a lot of financial premium education providers, why I stuck with ICFP? Because it's part of Bajaj Capital. Okay, India's trusted financial services company. And I will not more discuss about Bajaj Capital and the kind of influence it has given in the financial overview, and how it has changed the overall landscape of financial and credit markets in India. ICFP is the pioneer of CFP certification, and we were the ones who brought CFP to India. Okay, and we are there in this personal finance market from 2002, and we have been number one in this, while there are other education providers. Why we are class apart from them? Because our faculties are CFPs, CFPs, CFAs, CAs, and PhD. We have practicing CFPs as mentor and coaches, while I give my classes on mutual funds to wealth managers of Bajaj Capital. I am also mentoring the L4 level 4 guys in passing through and coming out in passing through their L4 final exam. And collectively, all the faculties have more than 130 years of professional experience and more than approximately 70 years of CFP teaching experience. So a good blend of teaching faculty who are actually practicing and they know the industry, how it's keeping on changing. While I've seen a lot of educational partners where their teachers are only teachers, where while here you will have practicing CFPs who will give you more of the industry knowledge, the session that I've taken you right now through. We have a highest number of CFP certificates and passing percentage. Our ICFP alumni, yes, last week I had gone to a RIA conference. RIA means Association of Registered Investment Advisors. We are about 900 in this country, and it was very great to see that 40 to 50% of them were CFPs in their own field, and the top board out of which Renu Maheshwari and the top three boards are CFPs from ICFP. So that's the great edge of being a ICFP alumni. You have a great network of corporates helping you. Lot of times, a lot of companies approach the academic head of ICFP for hiring. So we are given an edge over there also. We have also reached 100% passing percentage. Right now, we have seen around about 70 to 80%, more than 80% passing percentage. And we have seen a consistent, we have a consistent track record of 21 years. Okay, so this is the faculty I was talking about. Madhu Sinha is our dean. You can see from the degrees that she has, not more getting into it. She is an expert in personal finance. And right now, I would say she handholds our L4 students who have crossed their level 4 exam in clearing their case study. Okay. She takes our level 4 theory classes, which details more into soft skill training. She has been an expert in the personal finance and has been awarded by FPSB India. Dinesh Gupta has been my teacher who taught me how to use the calculator as well as Excel. Um, a person with more than 15 years of CFP training, and he creates a mark while while teaching the CFP students. The kind of depth of investment planning, insurance planning he has, I have not seen any other teacher in this country having that. Professor Ajay Malhotra is also a practicing financial planner. He is actually an advocate from Indian High Court, also part of the faculty. Rishi Narang is the academic head with 15 years of experience in investment research, and he's leading the academic front. He handles the he handles every candidate, every student who is there in the regular pathway or challenge pathway, and ensures understanding the strength and weaknesses of every student and helping him to clear the level 4 exam. Shivangi is the tax expert who gives the tax planning knowledge. Avdesh Singh is also there. Vibhu Venkat is the person who takes care in level 4. He teaches investment planning also. He is, I think, he has retired early right now and uh, given his whole and soul to ICFP and is critical. And you will see him every day handholding you in your clearing your level 4 exam. I've told Rishi has told you all about myself, so I'm not going through that. Okay, so this is about Madhu Sinha, who is our dean, who has been awarded FPSB India Awards Educator of the Year 23-24. Okay, so how we run? So we have, this is the study curriculum. We have virtual live classes on Zoom, which is done by experts, weekdays from Monday to Friday, 7:30 p.m. to 9:30, weekends from 9 a.m. to 11 a.m. Class recordings are also there for your view. We have e-learning class as well. Christian, if you want to come in,
Yes, sir. Tell me.
you want to talk about. So this is the the learning resources that we give. We give concept books, workbooks, group projects. We have a world-class LMS. Recordings are there, online mock test. While teaching, while I'm doing the session, we are having the level 4 candidates appearing for the mock test. Every week they have mock test, a 3-year mock test, which is regulated. You will get personalized mentors with whom you can discuss if you are facing issues. I'm one of those personalized mentors from ICFP. We have weekly doubt clearing session, case studies of practice, assignments. So it's a comprehensive process, a learning process where ICFP will take care of you in passing through this entire L1, L2, L3, L4. Okay, so we have pathways, two paths to how to clear this exam. Okay, one is a regular pathway. Okay, where this is for 10+2 uh, students who have passed 18 years plus age. There is no restriction. He can be from any stream. This is the kind of fee structure. 18,000 is the FPSB registration fee, which is valid for 1 year. Ebooks is around 32,500, exam fee 33,250, financial plan assessment 10,500, and once for all the 3-level special exam 10,500. Okay, so this is the fee structure for regular pathways. While Krishan and Kanaya will be telling you about why it's important to enroll today, because today we have come out with a good discount scheme for all our professionals, especially regular pathway, also the challenge pathway, guys. Okay, so this is the fast track pathways where we have seen a lot of corporate employees, a lot of professionals who are going for opting for ICFP. Okay, the eligibility is given there: CFP, CPA, CA, or fellow member from Insurance Institute, or certificate associate from Institute of Bankers, or postgraduate degree in economics, commerce, finance, financial planning, MBA in all streams from any AICT approved institution. You need to have 3 years of prior experience in BFSI and all. Okay, and this is the learning curriculum will give you the course book, online access to our workbooks, 52 hours of prep live interactive sessions, project mentoring, level 4, all the L4 books. You'll get an exam mentor to provide guidance, mock test, and doubt clearing sessions are already there, as I've told you. So fast track pathway is for all professionals who have 3 years of work experience with the kind of education criteria eligibility which I've told you. These guys can clear the exam in 4 to 6 months. While I've given an example of my friend who cleared the exam from ICFP in a record time of 3 to 4 months, excluding the time for the case study. Okay, Kishan, you want to take through this fast track pathway?
Yes, sir. If you want, you can.
No, you can go ahead. You can go.
Okay, the fast track validation fees, it's for 5,000 rupees for the FPSB board. And once you verify your documents, the FPSB is going to send you the registration link on your respective email ID. Registration plus FPSB content fees is 34,000 rupees. And once you are submitting your case study project, that is financial plan assessment project, it will cost you 10,500 rupees. Then the CFP final examination level 4, it will cost you 13,000 rupees. And then once you clear the examination and the case study will be approved, then you'll be applying for the final charter membership. The fee for that is 10,500 rupees. It should be paid step by step, not in the upfront entire amount lump. And we'll be guiding you throughout the process when you have to pay how much amount, and it should be paid in 5 to 6 months only. CFP for the regular pathway fees plan will be for the overall 4-in-1 study materials is 80,000 rupees level wise, right? When we talk about for the e-learning, the fees is 60,000 rupees. And for the fast track challenge pathway, the fees is 45,000 rupees. You can
Okay.
avail, yeah.
Yeah, so Kishan has got a good discount scheme at the end. He'll tell you more on that pathway and regular pathway. Was a discount? Yes, Kishan.
Those will be joining for the regular pathway virtual classes. So we'll be giving you the final certification fees, that is 10,500. It will be sponsored from ICFP, right? Once you clear all the examinations, it will be sponsored from the ICFP. That will cost you 10,500 rupees. And we have a good offer today. Flat 10% discount on the college fee structure. Either you'll be enrolling for the e-learning, virtual classes, and the regular pathway. Plus, you'll be saving the 16,250 rupees on the FPSB ebook content fees. Plus, we'll be giving you NSM 5A e-learning videos. It is having the complete 15 hours of video. You'll be going through with that entire e-learning access of this. And you can crack the NSM mutual fund examination after this. And along with that, we'll be giving you the quick learning course on Share Gurukul. That is also part of ICFP Bajaj Capital Group. So overall, for the one thing just I want to convey to you that we'll be starting a new batch in the coming week for the fast track. And if you enroll today for the fast track challenge pathway, you can enroll in the old fee structure of 35,000 if you enroll today, right? And we'll be having a new batch coming week is the orientation for the fast track challenge pathway. And we have interest-free student loan options available on 0% rate of interest into the 6 months easy installments. We just pay 10,000 down payment and you can pay the balance fees college into the 6 months easy installments.
Okay, so the offer for today, as Kishan said, I'll reiterate it again for fast track pathway. While you have seen the course fees 45,000, those guys who are enrolling today, we are giving it for 35,000 today. Okay, and for regular pathway, as we have told, you will be saving 6,000 on the regular pathway study fee. 16,250 on the FPSB content fee, 5,000 on the NISM 5A learning, 5,000 on quick learning courses. Okay. So this is a good offer for today. Please get in touch with our advisors, which we are, this is the number 9711437779. Okay. You can talk to our CFP advisors. We will guide you the entire process. Even if you have any questions, while if you are not asking right now, you can call our experts. Kishan, who is the program lead, will guide you in. If you have question regarding will my entire degree or my qualification, does it certify, does it clear the eligibility criteria? Any minor questions or major questions you have, our team is there. Please note down this number. We'll be helping you and guiding you through the entire process. Okay.
Robinson, I can see a couple of questions in the chat box. Would you like to answer it?
Okay. Is mutual fund a safe economy becoming unstable due to COVID tariff for Ukraine war? More than 30 people are closing SEP. See, I will answer this question in a very simple manner that money is made in bear markets. Money is not made in bull markets. Okay. Correction is the time to put your money into the market, but conforming with your risk profile and your asset allocation. Okay. And as I've said, mutual fund should be part of your overall asset allocation. The reason being because equity investing is a route to long-term wealth creation. Okay. And like mutual fund has its own risk, while you have to read the subject matter of a document carefully. But the last 30 years of Nifty, we have seen a 13% annualized CAGR, while there have been years where we have seen a drawdown of 10%. Every decade, we have seen a drawdown, a drop of around 30 to 60%. You need to be patient while dealing with the equity markets, equity mutual fund. If any investor cannot see a drawdown or a drop of 10 to 15% in their portfolio in a year, I would say equity fund is not meant for them. So you need to make sure as CFP, we teach you that how risk profiling, how is that important? Is someone is an RIA, how CFP adds extra, if someone is an RIA, how CFP adds an extra benefit. See, I'm an RIA. Okay, so I am registered by SEBI. Okay, so that stamp of SEBI gives me the extra edge. CFP, how it benefits me, because the client would understand that he is a subject matter expert of investment planning, personal finance, insurance, retirement planning, tax planning. He has cleared an exam, which is gold standard certification. Okay, so CFP also always gives you that added value. In India, RIA is recognized by SEBI, not CFP. Do CFP need to? Yes. See, to become an RIA, you need to clear NISM 10A, 10B. Okay, so now I think these are the only questions. Anything? Okay. Now, re-emphasizing the point that this offer is for today. Please call the number if you're interested in taking part through ICFP learning exercise on clearing you the entire CFP certification. Be in touch with experts. Kishan Vashisht is the program lead. He'll help you if you have any further questions.